Okay guys, so now we're going to talk about how we can determine what we need to risk per trade based on our back testing results to start out with. So this is going to give us a rough draft of what we should be risking per trade based around your personal risk tolerance. Again, I have to reiterate, this is not me telling you how much to risk per trade. You need to risk an amount you're comfortable with based on your own knowledge, your own back testing, and your own comfort level. And another thing that I need to mention is that this is only data through 2018 here on our date section. All we have is 2018's tested data, which is nowhere near enough to get the potential maximum drawdown for a specific strategy. Of course, we would need a massive amount of trades in order to actually get this maximum drawdown or potential maximum drawdown. So keep that in mind as we go through here, but this is just going to give you an example of how you can use your backtesting results in order to determine a rough draft of what you need to be risking per trade. So if you'll look right here in our risk per trade section, and also at the same time be looking over here at our max drawdown as well, what we need to do is come up with a max drawdown that we're comfortable with based around our back testing results at first. And this is going to give us a rough draft of what we need to be risking. So how we do that is just by trading this risk per position. Let's say we have a 5% maximum drawdown, or this is almost a 6% maximum drawdown, and that's not something we're comfortable with. Well, if you're not comfortable with that 6% max drawdown, then you'll need to risk less per trade in order to get that maximum drawdown lower, because the amount of trades we win and lose is not going to change. Once we have our backtesting results in based on the rules of our trading strategy, the amount of trades we lose in a row or the amount of trades we lose and win won't change at all. The only thing that we can control is the amount that we risk per trade. So if your risk per trade is at 2% and you have a max drawdown of 6 that you want to get less, what do you think we have to do to this risk per position? We have to shrink it, right? We have to make it smaller. So what we would start out doing is maybe a 1.5% risk per trade, which brings our max drawdown down to 4.48%. And the lower we go with this risk per position, guys, all the way down to 1%, then our max drawdown gets smaller, and also our percentage gain gets smaller as well. But what you need to focus on here at the beginning of your trading career is definitely going to be max drawdown. Don't worry so much about this column. What I see a lot of traders do is become obsessed with their total percentage gain, when in reality, your main goal as a beginner is just to not lose money. And that's what we're trying to get you to, is a point of profitability, a point of actually being able to go from 0% to a positive return at the end of the year without either getting too emotionally unstable to continue trading the strategy or losing the entire account balance. And those two things are going to be determined by your amount of risk per trade and by your risk management plan. That's why this risk management plan section is going to be an extremely important section in your trading plan. So once you have your back testing results, this is how you'll initially create your risk per position plan, is by coming here with those back testing results in here in your spreadsheet, and then changing this risk per position to a number that creates a max drawdown you're comfortable with. Now, when you're doing this, make sure that your trades are in the correct ascending order from the first date of the trade you recorded to the last date of the trade you recorded. This is going to give you a more accurate reading of maximum drawdown. And that's the really simple way to determine what your risk per position should be, using the spreadsheet that you've already downloaded. So in doing so, once you have back tested a number of trades that you're comfortable with throughout the pairs that you have decided to trade with, you should be able to come up with a proper risk management plan based on those results. And directly after this, we're going to create an entire trading plan around this pullback strategy. Then we'll jump into some demo trading with the pullback strategy. And after that, guys, it's off to the races. And it's up to you to determine whenever you're comfortable trading live. So let's go ahead and jump into the next video, where we will get into the exciting process of actually creating an entire trading plan around everything you've learned so far here in the transition course. I'll see you guys in that next video. Okay, traders, so now we're going to move on to the essential parts of a trading plan. Let's go ahead and discuss those. One of the first things we're going to look at is reasons and goals for your trading. Why do you do this, and what are your goals for your trading in general? Next, we'll take a look at the strategy that needs to be in your trading plan. You need to have rules set forth for your entries, stops, and targets. Then the optimized pairs that you're going to be trading. It's a very important part of your trading plan as well. Along with that, we'll also take a look at risk management plan. That's something that has to be there. You have to clearly define your rules for risk in your trading plan somewhere. And lastly, we'll be taking a look at the times you're going to be trading and the time frame you're going to trade on. These are all aspects we're going to go into more detail in later on in this video. We'll discuss each of these individually. So welcome guys to building a trading plan, and let's go ahead and move forward, talk a little more about what needs to be in this trading plan. And first off, we're going to talk about your reasons and goals for trading. So what are your actual reasons and goals? Examples of this, your reasons for trading may be to acquire freedom of time, financial freedom, passive income, or maybe you're just tired of having a boss and being told what to do. Then we're going to define the goals in our trading plan. What are your goals? Maybe your goal is to make less trading mistakes throughout the year. Maybe your goal is to treat your trading like a business or to have a net profit by the end of the year. So personally, for me, I actually have these reasons and goals in my trading plan. That's why I decided to use these. My reasons for trading are for freedom of time, for financial freedom. I started out wanting this to be for passive income, so that's still in my trading plan, although now it's my full-time income. And also I didn't want to have a boss telling me what to do. So those were all my reasons for trading, and waking up every day and reading all of those reasons made it easier to stay disciplined and easier to stay inspired to work towards my goal of becoming a profitable trader. Now my goals are to make less trading mistakes throughout the year. Currently I'm on 10 trading mistakes per year. Next year, I'm going to minus that to 8 and try to make only 8 trading mistakes throughout the whole year. I'm actually on track to make only 8 or so trading mistakes this year. I've only made about 4 and we're 6 months in now, or around 5 months in. So we'll see how that goes. Also, I want to have a goal to treat my trading like a business. I want to take my trading very, very seriously and always follow the rules of my plan just as I would if I owned a business, because guys, trading is a business. If you're doing it full-time or even if you're doing it part-time, it's a business for you. And also, I always want to end the year in the net positive. All right, so after reasons and goals, another thing we're going to have in our trading plan is the strategy we're going to use. In this case, the pullback strategy. We need to clearly define the rules of the pullback strategy in your plan, including every aspect of the strategy. I mean the indicators, all the conditions that have to be met before we look for entries, the entry reason number 1 and entry reason number 2, and the stops and targets, and any additional rules if you decide to add them. Now, at the end of this video, I am going to be sharing with you guys an example trading plan. I'm going to show you a full sheet of a trading plan so that you can get a better idea of exactly what you need in yours. And also, it's important for me to point out that these are just the things that I have in my trading plan. It's okay for you to have more or less in your own personal trading plan. I like to keep things extremely simple. So this is a very simple trading plan, and this is the one that I personally use for the pullback strategy. So after we have the strategy in our trading plan, we've defined all the rules, including the indicators, the conditions, the entry reasons, the stops, and the targets, along with any additional rules you've added. The next thing we want to add into the trading plan is going to be the optimized pairs. We want to take a look at the optimized pairs we're going to be using in order to trade with. Now in this case, I've already told you guys 3 of the optimized pairs that I personally use in my trading plan. So you already have the Aussie dollar, the Euro Canada, and the Canada Swiss. Again, guys, I cannot stress enough how much you need to back test these pairs on your own. Me showing you that they work well is just giving you a great place to start with your back testing. It is essential that you back test all 3 of these plus any other pairs that you decide to trade on your own. So just keep that in mind going forward, but we definitely want to have the optimized pairs we're going to be trading in our portfolio inside of that trading plan so that we don't make any mistakes and trade outside of those pairs. The next thing we're going to look at after the optimized pairs is going to be our risk management plan. Now, this is a very essential part of a trading plan. We need to clearly define the 4 main points of the risk management plan that we discussed in earlier videos. We need to clearly define our risk capital, our maximum exposure, our risk per trade, and our maximum acceptable drawdown. These need to be clearly defined somewhere in your trading plan. And if you have any additional rules you've created for a risk management plan, they also need to be defined here in this section. And after the risk management plan, we're going to be taking a look at the times we're going to be trading. Now here, we need to clearly define the times that you can spend behind the computer based on your current schedule. I mean your current schedule when it comes to your job, your sleep schedule, other things you make time for other than trading. You need to base your trading plan around the times that you have to actually be in front of your computer and to actually trade. So keep that in mind when writing the trading plan that you are going to have. And also on this section of the trading plan, you need to clearly define the time frame you're going to be trading on. Now, The pullback strategy for me works best on the 4-hour time frame. That's because I am a swing trader. It works best when it comes to the freedom of time, which is one of the things I wanted to start trading for. Not necessarily works best for profit. So you may want to test this on the 1-hour time frame, or maybe you even want to trade a longer term swing trade, meaning you may want to test this on the daily time frame. Either one of those things are okay to do, but make sure you clearly define those things inside of your trading plan. You want to make sure that you have a clearly defined time frame you're trading on and clearly defined schedule for trading inside of your trading plan. Now, lastly, we're going to go ahead and take a look at an example of what your trading plan may look like. Now, make sure you have this on full screen, otherwise this can be very difficult to see. But as you can see at the top, we have reasons and goals. Our reasons and goals for trading. Reasons: I trade for time freedom, I trade for financial freedom, and to be able to be my own boss. Goals: make less trading mistakes each year and treat my trading like a business. Strategies: of course, we have the indicator we're going to be using, or the indicators. We're going to be using the 50 EMA along with the ATR indicator. Conditions: each of the conditions are defined in the trading plan. You need to make sure you have them written down so that you can read over them at each and every time you place a trade to make sure you're checking off, yes, the market is above or below the 50 EMA. Yes, we do have a 2-candle pullback. Yes, we have my entry reason number 1 or number 2. So those kind of things need to be in your trading plan when it comes to the conditions for the pullback strategy. The entry reason number 1 and 2 need to be clearly defined in your trading plan. And finally, you need the stops and the targets for that pullback strategy clearly defined as we have here. Now, you'll also want to list your optimized pairs for your trading strategy and, of course, your risk management plan, followed by the final part of our trading plan, which is going to be the time you're able to trade and the time frame you plan to trade on. So guys, this is exactly how to create a trading plan around the pullback strategy. And what I want you to do is go ahead and write out your own personal trading plan. You can either do this on a Word document or just on a piece of paper. Either way is fine, but make sure you have all of your trading plan actually written down based on everything you've learned so far in the course. And from the things you learned, you are now ready. Once you have this trading plan written out, you're ready to start actually taking this into live market data. Now, I'm not telling you to start trading live. Of course, you need some demo trading before you can do that. You need to make sure that your schedule lines up with what you actually put in your trading plan, that you can complete these trades at the times you've put in there. You need to make sure that you understand the platform you're trading on, the broker you're trading with, how to place trades. You need to get rid of all of those little mistakes, which may take about a month of demo trading, plus a couple of months of demo trading will very, very much so help with your confidence and discipline. It is a necessity for you to demo trade for at least 3 months with the pullback strategy before opening a live account. After that, it's up to you to decide when you're ready to trade live. So guys, I hope this section of the course has been helpful. I know I wish I would have had someone showing me an exact replica of a trading plan at some point in my trading. That would have been incredible. So I did this because of that. I know this would have helped me a lot, and I hope it's been able to help you on your path to success as well. So that's going to do it for creating a trading plan. I'll see you guys in the next video.